Get ready for the action, because the USTR has kicked off major Section 301 hearings focusing on global manufacturing overcapacity. This is a massive move, as the Office of the United States Trade Representative is now investigating structural excess capacity across major economies including China, the European Union, Singapore, and Japan. We dive deep into what this means for global trade and American industry.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the logistics market showing a clear turnaround. Prologue's data is signaling a major turning point in the U.S. logistics sector, with warehouse activity continuing to expand through first quarter 2026 despite geopolitical uncertainty. Discover how sustained demand from advanced manufacturers is reshaping the industrial real estate landscape. In big news for supply chain reliability, Ascent Global Logistics has achieved an incredible milestone. Ascent Global Logistics has earned recognition as a John Deere Partner-Level Supplier for the 11th consecutive year, cementing their status as a top-tier logistics partner for critical North American production. Find out what this achievement signifies for supply chain excellence. And finally, we switch gears to real estate investment. Azora-backed Milepro Logistica has successfully offloaded 2 significant logistics assets in Spain for a hefty sum. Javier Picon from Azora explains how this sale aligns perfectly with the company's strategy to maximize shareholder value. Don't miss the full story. Stay with us. The United States Trade Representative, or USTR, has launched formal hearings this week concerning its Section 301 investigations into global manufacturing overcapacity. These inquiries are part of the Trade Act of 1974 and focus on structural excess capacity and production levels within various manufacturing sectors. Scheduled in March, these hearings follow a Supreme Court ruling against the legality of the White House's IEEPA tariffs in late February. USTR Ambassador Jamison Greer stated that the investigations will assess whether existing acts, policies, and practices are unreasonable or discriminatory and impose burdens on U.S. commerce. The nations subject to these investigations include China, the European Union, Singapore, Switzerland, Norway, Indonesia, Malaysia, Cambodia, Thailand, Korea, Vietnam, Taiwan, Bangladesh, Mexico, Japan, and India. Greer emphasized the administration's commitment to reshoring critical supply chains and creating American manufacturing jobs, noting that foreign economies' structural overcapacity is challenging these efforts. He highlighted that in numerous sectors, trading partners are producing more goods than they can consume domestically, displacing U.S. production or hindering domestic investment. Jonathan Gold, Vice President for Supply Chain and Customs Policy at the National Retail Federation, NRF, expressed support for addressing unfair trade policies, but stressed the need for remedies to be carefully calibrated to sector realities and consumer interests. Gold argued that high import volumes in consumer goods like apparel and electronics often reflect enduring U.S. demand rather than simple dumping. Gold advocated for sourcing diversification as a key factor in the investigation, noting the shift away from dominant suppliers like China due to rising costs and tariffs. He cautioned against broad tariffs, suggesting they function primarily as consumption taxes for American households and businesses when domestic production is limited, rather than stimulating new supply. Gold recommended a targeted, evidence-based approach focusing on several key areas, distinguishing between sectors where excess capacity displaces U.S. production versus those filling persistent demand gaps, focusing remedies on strategic or national security areas, incorporating downstream and consumer impacts, and avoiding one-size-fits-all solutions. Furthermore, Sean O'Neill of the America Cement Association pointed to structural overcapacity and unreasonable subsidization in countries like Turkey, Vietnam, and Saudi Arabia as creating competitive disadvantages and chilling investment in U.S. producers. Patrick Lozada of the National Electrical Manufacturers Association, NEMA, added that precision is crucial, noting that overcapacity varies significantly across industries. He cautioned that in markets like semiconductors for AI and memory chips, imposing additional import duties might raise costs for downstream manufacturers and consumers without stimulating new domestic capacity in the near term. Overall, the consensus among industry observers is that while confronting unfair trade practices is necessary, success hinges on a precise, sector-specific approach to protect U.S. competitiveness and supply chain resilience. The U.S. logistics sector is signaling a significant turnaround, according to the latest data released by Prologiz. The firm's Industrial Business Index indicates that a turning point is now approaching in the market. Data for the first quarter of 2026 reveals continued expansion in warehouse activity, with the IBI Activity Index firmly in growth territory. This resilience is noteworthy given ongoing geopolitical uncertainties, demonstrating sustained underlying demand. This demand is being driven primarily by advanced manufacturers, with a supportive rebound also observed in the retail and services sectors. Crucially, this strengthening demand is occurring as new supply enters its lowest level in a decade. This fundamental imbalance is projected to tighten vacancy levels and intensify competition for high-quality, strategically located assets throughout the remainder of 2026. Analysts anticipate that demand will remain durable moving forward, supported by an expanding customer base across the logistics ecosystem. Noi Dung Kai Tight. Ascent Global Logistics has secured another significant accolade, earning recognition as a John Deere Partner-Level Supplier for the 11th consecutive year. This top supplier rating, the highest tier offered by Deere & Company, was awarded for 2025. The recognition highlights Ascent's unwavering dedication to delivering superior quality products and services, coupled with a strong commitment to continuous improvement. The achievement was formally recognized by Ascent employees during ceremonies held on April 16, 2026, at the Deere & Company World Headquarters in Moline, Illinois. /N/ Ascent plays a critical role in supporting John Deere's North American production by managing time-critical inbound logistics, utilizing services such as ground expedite, air freight, onboard courier, and air charter. This sustained partnership is underscored by a history of numerous honors, including a Supplier Innovation Award in 2015, Supplier of the Year in 2016, Hall of Fame status in both 2019 and 2024, and recognition within the John Deere Cost Reduction Opportunities process in 2022. /N/ Darrell Knight, Chief Commercial Officer at Ascent Global Logistics, expressed gratitude for the ongoing relationship and the recognition, emphasizing the role of their team. It is an incredible honor to accept our 11th consecutive Partner-Level Supplier Award from John Deere, Knight stated. We're grateful for the relationship, but even more for what this recognition truly represents, our people and their passion for delighting our customers every day. This award is something the Ascent team has earned together, one shipment at a time, and we're deeply committed to this critical part of our customers' supply chains. /N/ suppliers participating in John Deere's Achieving Excellence program undergo annual evaluation across key performance areas, including quality, delivery performance, process alignment, value creation, and relationship management. John Deere established this program in 1991 to foster a supplier evaluation and feedback mechanism designed to drive continuous improvement. /N/ Ascent Global Logistics, headquartered in Belleville, Michigan, operates as a leading global provider of expedited, time-critical logistics solutions. The company connects customers to an extensive carrier network and its proprietary digital peak freight marketplace, which offers robust carrier capacity and transparent pricing, supported by 24/7 365 logistics experts to solve complex supply chain challenges. Azora-backed Milepro Logistica, the Spanish logistics real estate investment trust, established by investment firm Azora and Indasu's Wealth Management, has successfully offloaded 2 logistics assets in Spain for a total of 43 million euros. The sold properties include logistics warehouses located in Vilaverde, Madrid, and Gelida, Barcelona. Milepro Logistica, which operates under Azora's management, confirmed the sale and stated its intention to continue managing its remaining portfolio with a focus on maximizing shareholder value. Javier Picon, senior partner at Azora, highlighted the transaction as a significant milestone in the execution of Milepro's business plan. He noted that the sale of Gelida and Vilaverde allows for the realization of value generated since the entity's inception, aligning with the planned strategy and affirming the quality of the portfolio, which is built upon assets possessing strong fundamentals.